Jump right back into the gold price. It looks like it's starting to break down now. Of course, we've had all the news on the tariff stuff, so we know that that's going on in the backgrounds. So the markets are going to have probably a very nice pullback. So we need to get ready and see where that pullback leads us to see if we cannot pick up some nice long positions somewhere along the way or get in on a retest to get into a short. This one's going to be a bit more of a macro overlook since we are making some bigger moves to the downside. So we're going to do a macro TA as well as a little bit of local. So let's dive in. So at first, let's just go over what we saw here at the top. You saw a nice Model 1 distribution. You broke structure and you broke from this range and you had the RMC effect, the RMC, and you had the mitigation of this range. Fake out and take that liquidity from here for the real continuation, which was a nice play if anyone caught that RMC. So I like to take a look at everything as a set of ranges because the markets are just a range and a range and a range and a range over and over again. So we see a range here. We see a range here. And we broke up from this range. On a lower time frame, you had a range here. And we're coming down. So you can actually see this here. This was actually a larger scale accumulation into the manipulation, which led now, even spanning more time, coming down, hopefully down to this range here for the distribution. So this is a large power of 3. Delete those. So like I was saying before, we had this range to the upside. You broke out of this range to come back and retest it. And you took the liquidity from these shorts here, which led to the bigger move to the downside. So that's a bit of the macro of what's already happened. Let's see where we can take this next. Let's go back to a daily time frame. Zoom out just a little bit. All my alarms are going off. So let's pull our range tool. That'd be the first thing I do, is pulling the range tool to see where we are going next in the range. We have the 0.5 here. You can see the numbers there, but I actually like to look at this as a range all at the same time. So if things want to be really bullish, as gold probably will be out of many other things, comparatively speaking, we had this range here, which we did not come back and retest at all. And that's what we're doing now. So this could be the range here. Then we have the initiation out of that range. Then we come back to mitigate the range to hopefully see this continuation out of the mitigation of this range. So that's RMC. That would align very nicely with this order block down here, as well as the 0.5. If things are going to be very, very bullish, you usually do not come down to the golden pocket or the golden zone. You usually bounce off the 0.5. And we do have this range demand here. This would be your range demand, this entire zone. But your refined areas, which are order blocks with imbalances, you have 2 of them here. And as far as our market structure, you can clearly see market structure. This would be your low here. and there's your high. So this low here is your low to break for market structure. Come on. Going to change that to a white line. Oh, transparency was not all the way up. So this white line marks the line in the sand for a 12-hour break in structure. Let's go to the daily to see if that's still true. Yes. So this is also your daily structure. And again, also want to point out, we want to look at our range demand here as well as here. Neither of these range demands have been mitigated, so price has not come back to mitigate those at all. You can even see a bigger one here. As you can see, gold has been so bullish that we have rarely come back to retest these ranges. Now, if we take a look at the 12-hour, you can kind of see this pullback did dip into this range here. So that very, very small bit of a mitigation. However, you left a gap here, so I'm definitely going to keep that on our charts as well. Keep that in mind. So that's a bit of macro for you. If we take a little bit more zoomed out approach and we're taking this low to this high, again, I wanted everyone to look at this as a range. So this is your low of the range and the high of the range. So again, the 0.5 of the larger range is lining up well right around this low, where this was the next line in the sand after this daily structure. So if we really start to have a very nice pullback, you're going to have several breaks of structure. So if we do get down into here, you will definitely need a very strong sign of strength before entering a trade. However, this zone right in here would be a very nice zone to trade from in this macro structure. And if you wanted to refine it, which we always do, this structure here, or I'm sorry, this gap rather, this gap is lining up perfectly with the golden pocket. So that's what we have on the macro. Really, there's not going to be too much locally speaking. We are having a nice reaction from this first order block as we speak. Let's go down for a minute. Okay, so structure. This would be your high to break if we were to look at this bullishly. So as just a quick local setup, you would want to see something like this. And really, you want to see that retest this flip zone. So if we break this high and then we retest, that's going to be where I'm going to refine a long. And then you have this very nice trend line. So if we break this trend line, all the while breaking this structure, you can look for a nice long. However, since the higher time frames are very bearish, you would need to cover your long position very quickly here. Meaning that if we get above and you get a chance to have your stop loss at a break even, I would cover that position, because we might only end up getting to this supply or this supply here, or maybe we're just going to test this range here. So that would look something like this. And then further downside, and we have that break here. We have the smaller time frame, the lower time frame break here, being able to short here and taking it down roughly to this spot here. So that is my short idea. The other short idea would be if we come all the way back up again and take this liquidity here. And what I would want to see for that, you come up, you take it. Preferably, I would like to take this liquidity as well as a local SFP as well. So you have a double SFP with a bearish break of structure. You get in on the retest to take it down to here or even potentially further. So if we break this low, if we break this low, you're coming down to this low. If we break this low, we come down to this level. If we break that level, we go down to this level. So you're going to take it level by level. You're going to look at structure at each level as we get there. So let's go to a 4-hour time frame to see what we have a little bit lower. Let's turn on some levels really quick. Add that to our order blocks. So we do have a naked point of control and a daily in this order block. That's why I like this order block a little bit better than this one. We also had that 0.5 of fib. We do have a naked point of control here coming from this range that never got mitigated. So you could SFP this low into this naked point of control going up. So it would look a bit more like this. You have this liquidity line here, and you're going to take it, the quick SFP of this low, knocking out that naked point of control, and then we have that break of structure with the retest to take it higher. And this would be a scalp that could run. So technically, if you come down, high time frame structured, meaning 8-12-hour daily, you could still maintain bullish structure if you SFP this low and don't break below it. So that's the long and short of it all. Literally. Again, if we have a bigger time frame pullback and things are going to really give us a really nice opportunity for some lower levels, which it's due for. This range right here would be a lovely range. This gap would be a lovely long. However, it might be a bit too obvious, because I'm sure at some point lots of people are going to look at that level, and you have a lot of liquidity right below it to take. So I wouldn't doubt that we do come a bit lower. But again, this is why I'm not going to be setting limit orders anywhere. Did have this nice Model 2 distribution that turned into a Model 2 accumulation here. I see that gold definitely likes to do that. Likes to fake out the shorts and then just turn into a massive accumulation. We kind of had a Model 1 here as well. It's not as nicely formed, but you did take that liquidity, and then you took this liquidity here. So it's tap 1, tap 2, tap 3, Model 1, turning into tap 1, tap 2, tap 3, Model 2. Once again, you did the same thing here, only to distribute into an accumulation. This one was a bit of a better RMC play. So the RMC, you had this range, initiation, mitigation of this range. For the holistic sense, we had this range, initiation, come back to mitigate this range to only continue to a new all-time high. So everybody, again, we're not setting limits. I'm not predicting anything at all. I wait for price to come to these levels. I have all these alerts to alert me when we do get to these levels. So I do not even look at the charts until we get to this level. And once we do, I look for signs of strengths and a number of different confirmations to get into the trade. I don't just enter into the trade as soon as we get to this level. I would never do that. Very rarely, very rare cases do I ever do that. But that gives you some local and macro time frame stuff to pay attention to. Be careful. It is Friday. We have all the tariff stuff going on. I probably personally won't be trading today because I've made plenty of money for the week and I don't like to give it back. So with that said, everybody have a great weekend and I'll keep you updated.